Did Bernie Madoff bring down Wall Street?
Mm,
Did Enron bring down the energy sector?
mm-hmm,
Did WorldCom bring down lending? It's
mm-hmm,
there are frauds and there are scammers everywhere, and unfortunately, crypto is no exception.
mm-hmm.
I think Sam Bankman-Fried, like he just got arrested yesterday in the Bahamas. There's an indictment out against him. The U.S. is coming after him. The Securities and Exchange Commission is coming after him as well. I think the thing about crypto and what I tell people is the power of crypto, like I've been trying to say, is that the power here is that it's decentralizing things. It's
Mm-hmm.
taking like, and FTX is a prime example of what that is not. It's a centralized exchange where
Hey, everybody, welcome back to another episode of the Richard Geek Podcast. Today we have Matthew Leising. He's the co-founder of DeCential. It's a media company committed to telling the stories of the founders, builders, and visionaries who are creating a decentralized economy and internet experience. It should be extremely interesting to talk to Matt. He's been a reporter for 17 years. He worked for Bloomberg News, and he's been covering crypto and all that stuff since 2015. How you doing, Matt?
I'm great, Michael. Thank you for having me. How are you?
Good, doing well. Trying to stay. It's freezing today here in Scottsdale. It's 50 degrees, so I'm.
Yeah, we're not too far behind you in Los Angeles. It's been raining and cold here. It was 32 degrees when I got up this morning in LA, so it's
Yeah,
pretty rare.
it is. Yeah. So there's a lot that we could get on about all this crypto stuff. Whether or not there's just a lot of headlines. For our listeners, we're recording this on December 13th of 2022. So let's start at the beginning. How you got started? You're a reporter, and you just decide to get into it.
Yeah. So when I moved to New York in 2004, I was out of journalism school for a couple of years. I'd worked at like a local paper in Oakland, California, but wanted to go to New York and kind of just landed there without a job, without an apartment,
Mm,
my wife and and I just applied everywhere around the city. And Bloomberg News was pretty much the only place that was hiring then, even though it was a few years after the dot-com bubble had burst. The news industry was still kind of in bad shape. So Bloomberg hired me, and I started kind of covering energy and some derivative stuff, and then kind of worked my way into a beat where I was writing about markets and market structure and how markets work or don't work or how they're getting regulated, scams that are happening, what's going on in Congress, all that kind of stuff.
mm,
Um, the poster child for that was leading up to the financial crisis in 2008 when a lot of things went wrong. But one of the things that kind of added fuel to the fire was the over-the-counter derivatives market that really it was unregulated, and it just made a mess of Wall Street because nobody knew who where the risk was and what trades like Goldman had on with Morgan Stanley versus Lehman Brothers and all that stuff. It was just this really opaque mess. So the Dodd-Frank Act kind of went about sort of hoping
mm,
to clear up a lot of that. I covered that really intensely. So fast forward a couple of years, and I had known about Bitcoin for a while, but by 2015, I think I had a light bulb moment after I read a piece in The Economist that explained what the blockchain technology was behind Bitcoin and what made it work.
mhm,
And I realized, oh, it's a network of computers. It's a global network. It's peer to peer. It's unstoppable in terms of like governments or corporations. You can't. Basically, the only way you can shut this thing down is to shut down the internet. And I realized that the
mm,
parallel there was like Wall Street was a big network as well. And if it could kind of take this same principle and put its all its customers and its other counterparties at other banks on a same network, now you're avoiding all the silos that you get, which is why it takes a check to clear 3 days to clear, right? Because it has to go from my bank to your bank. They have to reconcile their ledgers, and it's a kind of an inefficient process. If on the other hand you were all kind of flat in the same network and you could do that instantaneously, I realized, oh, that would save Wall Street, hundreds of millions of dollars a year. And so Wall Street was already starting to experiment with that kind of stuff at the point. So it wasn't like I was ahead of the curve or anything, but I realized it could have some pretty profound implications. And so started covering it. And then pretty soon it kind of took over my whole beat because crypto just really kind of exploded in 2017 when Bitcoin hit $20,000. And then, it all crashed. And so, and then from there on, it just sort of like became all consuming. And I had been introduced to Ethereum at that point, which is the blockchain, the most important blockchain that came after Bitcoin. And Ethereum allows you to do like a million things in a blockchain environment, whereas Bitcoin allows you to do one thing, and that's like move value from person A to person B. So Ethereum was much more interesting to me, and I started writing about it. I actually wrote a book on the early history of Ethereum and Vitalik Buterin, the guy who invented it, and all the kind of mangy cast of characters that he gathered around him to make it a reality. And that was a lot of fun. So I've just been kind of, really diving into it ever since then.
Now, tell us a little bit about, your media company and then second part, what do you really mean and what people, I've heard this term about, decentralizing the financial industry and the economy, the internet. What do you mean by like decentralizing the economy, and where does your company fit into that?
Sure. Yeah, so I started DeCential last year with my partner, Neil Berkeley. He's a documentary filmmaker. So I'm on the editorial side, he's on the filmmaking side. And what we're doing is focusing on the people that are making like DeFi a reality, and in the Web3 kind of world, something that's real. We both thought that there wasn't enough attention put on the actual people, and we wanted to kind of humanize the industry. And what we had found by like doing work in this area is that pretty much everyone you meet in the blockchain space is really interesting. They're probably pretty weird. They're probably very smart, and they probably come from all different walks of life, as this is attracting people with these possibilities for kind of new ways of remaking things that we already know, like banking or art, or the financial world or commerce in general. So that's what we've been doing. We just turned a year old a couple months ago, and so we're really trying to tell the stories about the people and humanize them and bring new people in that way, because I feel like if I can tell you a story about an interesting person, maybe I can explain to you what an NFT is at the same time, and you won't even realize it. It's like, stuffing the vitamins into some candy or something. So that's DeCential. And then what we mean by decentralized finance or decentralized economy or internet is it's really simple. You take out the middleman, you take out the central kind of gatekeeper who for the most part probably owns the data that you're giving to them. They can sell it and repurpose it back to you in terms of like targeted advertising and other things that are kind of nefarious and not something that I necessarily want. They can also kick you off their platform. They can charge high fees. So a good example is like the Apple's App Store. They take 30% of everything that is sold through the App Store. So another good example is Twitter, where we've seen a lot of changes with Elon Musk coming in. Before that, high-profile people were getting kicked off the platform. There's that central actor there that is kind of the intermediary, and a lot of times it's just kind of taking rent. So the idea for a decentralized version of all of those things is that there is no intermediary. It's a peer-to-peer network, a peer-to-peer system where, for example, if I want to trade cryptocurrencies on a decentralized exchange, I go and find someone else, and then I'm interacting with a smart contract, which is a piece of code. So it's not a centralized market like the New York Stock Exchange, where there's brokers and executives It's all based on code, and I put in my order, and then it matches me up, and we trade peer to peer. So there's other things in the works of like decentralized video streaming services where YouTube would be the main example there. um, People in the crypto world know that YouTube has some pretty strict rules about content that it wants to put on its platform. If it's cryptocurrency related, and a lot of people have had their content kind of banned, or it's not an option for them to use YouTube. So a decentralized version of a video streaming service, you wouldn't have that possibility, or have that conflict. So
Mm-hmm.
it's really about taking the middleman out of the equation as much as possible.
And do you think that is something that might be trying to do by saying, "Look,
No.
I'm just going to bring in this"? Is he
No,
trying
I
to
think he very
decentralize,
much.
or is he?
No, I think he very much likes to be the middleman. He likes.
Yeah.
It seems to me, anyway, from what he's doing recently, that he enjoys pulling the levers of power at Twitter and
Mm.
being able to say, now I'm going to charge you for a blue check mark, or
Mm-hmm.
this person can participate in my platform and this person can't. So,
Mm-hmm.
in a decentralized version of that social media application, you wouldn't have that option. There would be no one in there to say, you're kicked out. So, it's not all great. Like that could potentially, of course, it's not hard to imagine that could lead to a platform that's full of, anti-Semitism or hate
Mm-hmm.
speech or all sorts of things if there's no one there to police it.
Mm-hmm.
So it's a lot of questions still remain. It's just that it's an alternative to the systems that are already out there right now. And that's what I try to tell people about why I think crypto and Web3 are powerful, is because they're reimagining these systems that we already have, but in a different way. And they're giving you an alternative. If you want an alternative, here it is. We're working on it. If you don't, that's fine. You can stay with Facebook. You can stay with JP Morgan, whatever, but for other people who want something different, that's what's being created.
Mm-hmm. How do you? Yeah, there's a lot going on in crypto right now.
Yeah.
Sam Bankman-Fried, the FTX founder. How do you tell our listeners, it's like, look, crypto's still there. I'm seeing articles now, 10 years of smoke and mirrors, that's all crypto's been. There's a lot of negativity right now. What do you say to our listeners that look, maybe we need more regulations for people like Sam, with the FTX,
Yeah.
what do you say to tell people this, like, look, crypto's going to be okay?
Well, did Bernie Madoff bring down Wall Street?
Mm.
Did Enron bring down the energy sector?
Mm-hmm.
Did WorldCom bring down lending?
Mm-hmm.
There are frauds and there are scammers everywhere, and unfortunately, crypto is no exception.
Mm-hmm.
I think Sam Bankman-Fried, like he just got arrested yesterday in the Bahamas. There's an indictment out against him. The U.S. is coming after him. The Securities and Exchange Commission is coming after him as well. I think the thing about crypto, and what I tell people is, the power of crypto, like I've been trying to say, is the power here is that it's decentralizing things. It's
Mm-hmm.
taking, like, and FTX is a prime example of what that is not. It's a centralized exchange where there was no transparency into it. People did not know, until it came out, that the balance sheet was so fully stacked with these FTT tokens, which then dropped in value and led to the whole cascading effect of the bankruptcy. So if you're in crypto and you're like relying on centralized platforms or services like FTX, I think you're kind of doing it wrong, to be honest. Of course, you need an exchange to buy and to sell things, to change dollars into crypto, or into Bitcoin or Ether or whatever, and to get it out. But other than that, I don't think you should be leaving any money on an exchange in any situation, because it kind of sets you up for this kind of fraud. And if you have your money in your own digital wallet that you control and you have the keys to, that's the way to do it here. And so, scammers are going to scam, unfortunately. people that are interested in this market need to be smart enough and savvy enough to do as much as they possibly can to not to not open themselves up to these frauds and scams. And that means controlling your own currencies, your own NFTs. Do it yourself. Don't trust other people, because we've seen too many times in this space that exchanges are not trustworthy. If it's not a fraud, they might be their security might be lax, and they might be hackable. That's happened too. So I just, the infrastructure is young, and it's still being built, and so I just really, the thing about it is, it's tricky right now, and it doesn't have the best user experience in the world. But if you want to get into it, you need to kind of overcome that stuff and figure out how to custody your own assets, so that you have control over them, and you don't lose $10 million on FTX like the guy from Shark Tank did. So
yeah. And do you think that this will be a good thing or bad thing? Yeah, because I'm seeing with Washington that they're going to want more regulations around this.
Yeah, at DeCential, we're doing a year-end roundup where we're talking to a whole bunch of people we like in the space, and we're asking them, what was good about 2022, what was bad, and quite a few people have said they really hope that this is that the FTX disaster kind of spurs regulation, and that it starts like actually something happens, in the regulatory front, because the SEC so far has just been regulating through enforcement actions where they'll sue a specific company, or maybe it's some traders, and say, you've done this wrong, this is illegal, this is an unregistered security, we're suing you. And the SEC relies on the rest of the industry seeing that and saying, oh, are we doing the same thing? Maybe we need to change our behavior. So it's not a good way to regulate. I hope that Congress gets involved now, and that I hope legislation is written that can help people in this industry know where the lines are, because they don't know that right now. And it's not fair to them. If you're a good company and you're trying to do the right thing in the United States, you need to know what the rules are. And I think that the SEC and Congress is doing a disservice to this industry right now by not giving them those rules.
Yeah, and I think, and there's a lot of emotions right now. You look at what's happening to Bored Ape.
Yeah, a lot of people have lost a lot of money.
A lot of people lost some money, and what are they doing? They're going after the celebrities who endorsed it, and that's a whole other thing. That if, and I think that's a slippery slope that, wow, just because someone endorsed it and this company loses money, is it the celebrity's fault?
I think it depends. Some of those folks had been given the coins, ahead of time. And so, if they're out there endorsing a coin or something, or a certain NFT collection where they're not disclosing that they have a large personal stake in the thing that they're trying to sell you, I think that's a conflict of interest. And I think you can get into trouble for that, especially if the SEC thinks what you're shilling is an unregistered security, which, then you've got that to worry about as well. If you're just being paid as, a spokesperson, or you're endorsing it, but you don't own the actual thing, or haven't been given a bunch of the coins or whatever, I think that's where I would say, yeah, that's too much. It's an overreach. So I think it comes down to that kind of like, whether is there some sort of other way that you're making money from this deal that doesn't seem obvious.
Yeah, it's it's just interesting because it is so new, and you get the older generations to say, well, wait a minute, these, how do you trade money on code? And they're like, they want to see the green, they want to see their money in the bank, they want to see all this sort of stuff. What do you think the banking industry, are they going to take a step back, because they've been kind of hesitant?
I think no, I think they're actually recent signs at least point to the fact that I think a lot of big banks and corporations view the underlying technology as something that's interesting and worth exploring. Goldman Sachs just said last week that they are looking to buy a bunch of Web3 companies that have come down in value quite a bit since the FTX, because FTX just took kind of the air out of the room, right? And so the valuations in terms of what Goldman is saying are much more interesting to them right now.
Mm.
You've got Starbucks that just is testing a new way of doing its rewards program that uses NFTs and the Polygon sidechain that works with Ethereum. So think about the millions of people who have a Starbucks card and rack up those points for free coffee. Reddit is doing a similar thing where it's issuing digital wallets to some of its users. I think it's more than 4 million have been issued on the Polygon sidechain. So a lot of these, Nike is in there too, like there's a lot of luxury brands that are doing a lot of stuff with digital goods that you wear in the metaverse. So I think those companies are not, they're pretty conservative. You think Goldman Sachs it's not a maverick. And I think, so I think that kind of shows you that this technology and the way that people are thinking about it isn't going away. A person I speak to a lot in the space is like, you think about Disney should really have some sort of digital coin where if you own the coin, you can get into Disneyland a little bit ahead of everybody else, or you get, a fast pass, or you get to get Disney content before everyone else. And it can unlock all of these perks that today it's really not that possible to do. And so I think that's what's getting people's attention in boardrooms and on Wall Street, that there are a ton of new ways to think about how customers engage with you, and then take it to another thing is how artists and their fans can engage, whether you're a musician or you're a painter, or you're you're in Hollywood. And so it's just unlocking a lot of new potential ways of going about things. So I think that's what's really interesting about it.
Yeah, and I'm starting to see Bitcoin ATMs in places. I was like, going, how does that work? But it's all interesting. You'd mentioned a couple times Web3. What does that mean?
Yeah, so Web 1 was the early internet where everything was, finally computers were connected around the world, and you could be in a chat group or a online forum, but there wasn't a lot of infrastructure built on top of it. Web 2 is when that infrastructure came into place. So the Netscape browser kind of unleashed this version of Web 2, and then on top of that, you've got then the .com boom came along, and you've got pets.com, and you've got Amazon, and all sorts of things, Facebook and Twitter, but those are all centralized, entities and corporations. Now Web 3 is where you take that same idea, but you are building decentralized organizations and services on top of a blockchain. So it's taking, like, it's what I was talking about before, where you might want to have, you might want to have a social media service that but you want to be in more control of it, and you don't want it to be centralized and have an Elon Musk be able to come in one day and buy it and change all the rules on you. So Web3 is really all about creating these new versions of things that we already have, but they're just decentralized and more peer-to-peer.
In your book, which is it's called Out of the Ether: The Amazing Story of Ethereum, and you talk about what is the $55 million heist that almost destroyed it all. Tell us a little bit about the book and what was this heist.
Yeah, sure. The heist, so Ethereum went live in 2015 in the summer, and it didn't have a lot of, it was quite early and it's obviously is early. So what, having a blockchain is great, but what you need the apps on top of it that people want to use. So there wasn't a lot of that, but there were a lot of people who wanted to create apps for it, and businesses and startups that would run on the Ethereum blockchain. So instead of like everyone going out to like venture capitalist firms and private, or raising money on their own, the idea was, let's all pool our money, and people can apply to this pool of money And if they get voted on for their idea, for their startup, then they'll get some of that money to go away and build their project. So it's quite similar to like a venture capital fund. It's just like in a digital version of it.
Mm.
And so this big pool of money was called the DAO. That stands for Decentralized Autonomous Organization, which is, you know, a terrible term that was made up by coders. But what happened was, so the idea, you would send your money to this DAO, which is a smart contract, and you'd get some DAO tokens in return. And with those DAO tokens, you would then vote on the projects that were trying to come and get funding to create their company. So the people who started the DAO thought maybe we'd get $5 or $10 million, you know, in this big pool of money that we would then allocate to folks. It turns out by the time that it was over, they had raised $150 million in Ether, which is the cryptocurrency on the Ethereum blockchain. A couple of weeks later, the price of Ether kept going up, so the value inside the DAO kept going up. And by the time it was hacked, it held $250 million. So $250 million was sitting in this smart contract on the Ethereum blockchain that wasn't even a year old. And it showed its age, where the DAO, the smart contract on top of the Ethereum blockchain, had a bug in it. And the hacker was able to get in there and steal $55 million, while people just had to look on, because once you deploy a smart contract onto a blockchain, it's very hard to change it. It takes a lot, and takes a lot of time. And so folks had to just sit there and watch their money get siphoned off by this hacker. So it obviously was a huge black eye, and it really kind of made the community, the Ethereum community, kind of really had to do some soul searching. There's never been really like good relations between people who like Bitcoin and people who like Ethereum. So the Bitcoin people were all laughing at the Ethereum people and saying, look what, you know, you guys are so stupid. Look what you're doing with your smart contracts. And so it set off this whole chain of events that was really kind of fascinating and complicated. And that was the seed of the book that I wrote, because it's one of the most fascinating stories I've ever come across. And I realized I could tell that big story in different chapters throughout the book, and then in other chapters write about Vitalik Buterin and write about the people who were making this thing, where Ethereum came from. And so that was kind of the genesis of it. And it was the most fun I've ever had in my career. And we're working on turning it into a documentary series. So it's been optioned, and hopefully someday soon you guys will be able to see it, you know, maybe on Netflix or Amazon or something like that.
And where can they get the book if they're interested?
Anywhere online. Amazon's got it. Wiley is my publisher, wiley.com. If you're adventurous and you'd like to get the NFT version of the book, you can go to outoftheether.net and check that out there. So you get the physical book, and then you can you register on a blockchain, and you get an NFT version of the book as well. So it's just a little fun thing. But yeah, pretty much anywhere online that you find books, you can find Out of the Ether.
Very cool. Matthew, you know, I appreciate you coming on. We've kind of opened our minds and our eyes on all the different decentralizations, Ethereum, and it's been a pleasure. And where else can people get a hold of you if they're interested in learning more?
Yeah. So my DeCential is at DECENTIAL.io. That's the website. We're on Twitter at DeCential Media. I'm on Twitter as well at Matt Leising. Yeah, that you can definitely find me there if you guys are interested.
Sounds good. And everybody, again, it's Matthew Leising, co-founder DeCential Media, and longtime author. Matt, I appreciate you coming on the Richard Geek, and I hope you have the rest of your day goes well.
Thank you very much, Michael.